Hey everyone. So if you're here with us today, you're probably looking to get the rundown on Shilpa Medicare's second quarter performance for fiscal year 25, without having to dig through all the financial reports themselves.
Right.
And that's what we're going to do. We're going to take a deep dive into their press release and financial statements, auditor reports, investor presentation, all of it, and pull out the key takeaways. A quick reminder for those who might be new to the company, Shilpa Medicare Ltd is a big player in the Indian pharmaceutical space, and they've been busy.
Yes, they
A
have.
very busy quarter.
It's interesting. I think the thing that stands out immediately is their consistency of growth.
Absolutely. I mean, the headline number, the one that kind of jumps out at you,
Yeah.
is that 1,008% year-over-year increase in profit after tax.
Wow.
They went from Rs, 1.6 crore in Q2 last year, to a huge Rs, 18 crore this year.
Yeah.
I know percentages can be a little misleading sometimes, but that's hard to ignore.
Yeah, it really is. And it's not just a one-time thing either. This is now 8 consecutive quarters of EBITDA improvement for the company, meaning their core profitability is just getting stronger and stronger. That's a really positive sign for anyone following them.
Right. Like they've found this rhythm and they're sticking to it, which is comforting, I think, to investors who are looking for that long-term stability. So we know they're making more money. The question is, where is it coming from? Well, Shilpa Medicare actually has a pretty diverse portfolio.
Yes, they do. Their API business is the one that brings in the most. That's the active pharmaceutical ingredients. That makes up about 55% of their revenue. Then there's the formulations business, where they actually package those APIs into, the pills and injections that we might use. That's another 34% of revenue. Then there's their biological segment, which is at 9% of revenue. And then just a tiny sliver for other sources.
It's like a well-balanced meal, right? You need all the different food groups to be healthy.
Yeah.
And it seems like that diversity is really working in their favor.
Okay.
But let's zoom in on a couple of those segments. First up, the API business.
Okay.
I was reading their investor presentation, and I was highlighting all over the place because there's just so much happening.
Right.
They're going to be completing validations for new molecules like mycophenolate mofetil and mycophenolate sodium soon. And they're working on getting palbociclib and olaparib validated as well, which, if you don't speak pharma, those last two are really a big deal in the world of oncology drugs.
Oh, and did I mention they're expanding production for tranexamic acid?
They're not resting on their laurels. They're actively expanding that product portfolio and strategically targeting areas with a lot of demand, like oncology. This suggests to me that they're looking to capture a larger share of that API market. It's competitive, but they're clearly trying to, really make moves to be a dominant player. Yeah, so they're playing offense in the API market. What about formulations? It sounds like they're scoring some big wins there too, right?
Absolutely, and they're being very strategic about which markets they're going after. So, for example, they just launched the first generic nilotinib in the EU, and that market is worth something like US $413 million.
Wow.
They also got approval for axitinib in the EU, launching next year, and then in the US market, they launched their first NDA product, Pemetrexed RTU. Now, NDA stands for New Drug Application. It's a very, very long and expensive process to get a new drug approved by the FDA.
So that U.S. launch is a pretty big deal for them, wouldn't you say?
Definitely a feather in their cap. It shows they're serious about competing in one of the most lucrative pharmaceutical markets in the world. And they're not doing it alone either. They're working with partners like Amneal, another pharmaceutical company, to launch products like bortezomib RTU. And that one's estimated to have a U.S. market size of $96 million. Partnerships like that allow them to share the risk and leverage the expertise of companies that already have a strong foothold in these markets.
Okay, so formulations business is firing on all cylinders, but wait, there's more. They're also stepping into a whole new world. Biosimilars.
Right. This is where things get interesting.
Biosimilars. That word sounds kind of complicated, just like we're moving from baking a cake to like a full-on science experiment,
Well, yeah, there's definitely a lot of complexity there, but think of it this way. Biologics are medicines made from living organisms. They're way more complicated than, say, just your typical pill. A biosimilar is basically a highly similar version of an already approved biologic. It's kind of like a generic, but for those more complex medicines. They're not exactly the same, but they have to meet super strict requirements to show that they work just as well and are just as safe.
Okay, so Shilpa Medicare is essentially trying to create more affordable versions of these really cutting-edge drugs. That's pretty ambitious. What specific biosimilars are they working on?
2 big ones, adalimumab and aflibercept. Adalimumab is used for a bunch of autoimmune diseases like rheumatoid arthritis, psoriasis, Crohn's disease. Shilpa Medicare finished phase I trials for their adalimumab biosimilar, meaning they tested it in a small group of people, made sure it was safe, and now they've applied to start those larger phase 3 trials.
So they're moving steadily along that pathway.
Yeah.
What about aflibercept? What's the story with that one?
Aflibercept. That's used to treat some serious eye conditions like wet, age-related macular degeneration. It's actually the leading cause of vision loss in people over 50. And get this, the global market for this drug is huge, something like US $9.2 billion.
Wow. That is a massive market. So if Shilpa Medicare can successfully bring their aflibercept biosimilar to market, that could be a real game changer for them, right?
Yeah. Oh, absolutely. It would open up a whole new revenue stream for them and, really solidify their position as a leader in that biosimilar space. But, you have to remember, it's a long and challenging road. Developing biosimilars requires a ton of expertise, investment, and of course, you have to navigate those complex regulatory hurdles.
I can see why they wouldn't put all their eggs in one basket then. It's good that they have those other business segments to provide that more consistent revenue.
Exactly. Speaking of which, can we circle back to their API business for a second? Remember how you were highlighting all those new molecules they're working on?
Oh yeah, for sure. Seems like they have a whole strategy for how they approach that market.
They do. It's not just about, adding more and more molecules to their portfolio. They're really being deliberate about it. They've actually divided their API business into 5 segments: oncology, non-oncology, CDMO, polymer, and others. And really, it's their oncology segment that's the star performer. In Q2, it brought in Rs 192.8 crores. That's 145% growth compared to the same quarter last year.
Wow, 145%. That's, almost unheard of, right? What's driving that incredible performance?
It's likely a combination of things. The global demand for oncology drugs is just constantly increasing, and Shilpa Medicare is in a great position to capitalize on that. They're known for having competitive pricing, and they have a strong track record of meeting all those regulatory requirements. They've actually filed like 245 DMF's Drug Master files with major regulatory authorities around the world, including the US FDA. These files give those agencies all the confidential details about their manufacturing process, ensuring that everything's up to standard.
So they built a real reputation as a supplier of these oncology APIs. That makes sense. What about their non-oncology API business? Is that keeping up?
Well, it may not be growing as explosively as their oncology segment, but it's still doing well. They saw a healthy 12% year-over-year growth, bringing in Rs 78.7 cores in Q2.
Still a solid growth, yeah. It sounds like they're really investing in their API business, especially in oncology. They're focused on those high-value molecules, they're expanding their production capacity, and like you said, they're making sure they're meeting all the regulations in these key markets.
Exactly. And all of those initiatives we talked about earlier, like the plant validations for mycophenolate mofetil, mycophenolate sodium, palbociclib, and olaparib, and the expansion of tranexamic acid production, those are all part of that plan. They're staying ahead of the curve.
Like they're building the infrastructure for long-term success. It's not just reacting to the current market, but anticipating what's next. Now, let's talk about how they actually turn those APIs into medicines people can use their formulations business.
Right. This is where they take those raw ingredients and turn them into the tablets, capsules, injections, all that. And they're doing really well here, too. Q2, their formulations business brought in Rs 119.6 cores. That's a 40% increase compared to the same quarter last year.
Okay, let's break that down a bit. Their investor presentation highlights their formulation business by region: the US, Europe, the rest of the world, their domestic market in India, and then a category for licensing and services. It seems like they've got a lot going on in a lot of different places.
They do. And they tailor their approach to each market. For instance, in Europe, they partnered with a leading generic drug company to launch that first generic nilotinib we talked about. That partnership gives them instant access to a wide distribution network and, the expertise of a company that really understands the European market.
Makes sense. So they're using partnerships to enter new markets more efficiently. What else is happening in the formulation space?
Well, one thing they're good at is playing the long game. They're strategic about when they launch new products. They recently got approval for axitinib in the EU, but they're planning to launch it next year when the patent on the original drug expires. It's all about timing and understanding the regulatory landscape.
It's pretty smart. It's not just about having a good product, it's knowing when and how to bring it to market.
What about their U.S. strategy? You mentioned they launched their first NDA product there.
Right, the Pemetrexed RTU.
Yeah.
And they're already seeing their market share grow. They're also working with Amneal, that partner we mentioned earlier, to launch bortezomib RTU. What's interesting about this one is it's actually the first ready-to-use version that's approved for both intravenous and subcutaneous administration.
So they're not just copying existing drugs, they're actually finding ways to innovate and make them even better. That's got to give them an advantage in a crowded market like that.
Exactly. And this commitment to innovation is clear in their development pipeline. They've completed phase 3 studies for a new treatment for fatty liver disease, and/or UDCA, and they've already submitted their application to the Indian regulatory body, expecting to launch that next year.
Oh, wow. That's great news, especially for patients in India struggling with fatty liver disease, which is, it's becoming more and more common. What else is in their pipeline? All sorts of interesting things. A transdermal patch for Parkinson's disease, a topical lotion for hair loss, an injection for nausea and vomiting caused by chemotherapy. They're even looking at new ways to deliver drugs, like orally disintegrating films and transdermal systems.
It sounds like they're really covering all the bases.
Yeah.
It's smart to have a diverse pipeline across all those different therapeutic areas.
Absolutely. They're not putting all their eggs in one basket, and they're always exploring new avenues for growth. And, they have a really strong system for getting regulatory approvals. They filed a ton of ANDAs, abbreviated new drug applications for generic drugs in the US, as well as applications in the EU and other regions. This ensures a steady stream of new product launches, which is, of course, essential for keeping that growth going.
It's like a well-choreographed dance. They're coordinating all these efforts across different markets, therapeutic areas, regulatory pathways. It's all to maximize their impact and potential for growth.
Exactly. And don't forget about their CDMO business. It brings another layer of stability and strategic partnerships to the mix.
Oh, right. Their CDMO business,
Mm.
the contract development and manufacturing organization side of things. This is where they partner with other pharmaceutical companies to help develop and manufacture drugs.
Right. They've been finishing up some projects with clients in Korea and the US, and they're in the middle of a tech transfer for a project in the US. Plus, they've signed on for 2 new CDMO projects, so that part of their business is definitely doing well.
It's almost like a behind-the-scenes operation that really contributes to their overall success. And, it probably helps them build relationships with other companies in the industry, leading to even more collaborations and licensing deals down the line.
Exactly. It's a really smart way to diversify their revenue streams, gain experience working with different kinds of drugs and technologies, and just broaden their network within the pharmaceutical world.
So to sum up everything we've talked about, it really seems like Shilpa Medicare is knocking it out of the park. Their API business is booming, especially in that high-growth oncology segment. Their formulations business is really smart about which markets it targets, using a mix of generic drugs and new, innovative products. And, of course, they're moving into the world of biosimilars, which could be a huge opportunity in the future.
Yeah, they are firing on all cylinders. It'll be really interesting to see how all this translates to their financial results. Speaking of which, why don't we dive into those numbers in the final part of our deep dive?
Okay, so we've gone pretty deep now exploring all these different parts of Shilpa Medicare's business, their strategies, their expansion plans. But now it's time to really look at the financials and see what the numbers tell us. Because, all the impressive growth and those exciting ventures, they don't mean much if the numbers don't actually add up in the end, right?
Exactly. It all comes down to the bottom line. And when you look at Shilpa Medicare's financial performance this quarter, it really does tell a story.
Okay, so let's talk numbers then. We touched on gross profit and EBITDA margins earlier. Those are really important for understanding how well a company is managing costs and turning sales into profit. I remember the first time I tried to figure those out, I was like, what is this? But once you understand it, it's actually pretty insightful.
Yeah, for sure. Think of gross profit margin as like the percentage of revenue the company keeps after they've paid for, directly producing those goods or services. So Shilpa Medicare reported a gross profit margin of 67% in the first half of this fiscal year, FY25, and that's up from 63% the year before. So what that means is basically they're getting better at managing those costs of goods sold. Maybe they're negotiating better prices with suppliers or finding ways to be more efficient in their production process.
So they're not just selling more, they're also making more profit from each sale. That's a good sign, right?
Absolutely. And it gets even better when you look at their EBITDA margin. This one considers their operating expenses like salaries, rent, marketing, research and development, all of that. Their EBITDA margin has jumped to 27%, up from 19% the year before. That tells us they're really keeping those operating expenses under control while also boosting revenue.
Yeah, it's a tough balance. You have to invest in growth, but also make sure costs aren't getting out of hand. Shilpa Medicare seems to be finding that balance, though.
They really are. And that efficient financial management is showing up in their bottom line, their profit after tax or PEAT margin. It surged to 5%, up from just 0.5% in the first half of the last fiscal year.
Wow, those are some big improvements. No wonder people are paying attention to their stock. But we have to be real. No company operates in a perfect world. There are always risks and challenges. We mentioned that regulatory thing earlier, the arbitration award.
Right. Yeah, that's definitely something to keep in mind going forward. But even beyond that particular issue, the pharmaceutical industry as a whole, it's pretty volatile. Shilpa Medicare faces tough competition from both companies in India and internationally, and drug prices can change a lot. There's always the possibility of changes in regulations that could affect their business too.
And let's not forget about currency fluctuations. A lot of their revenue comes from international markets, so they're exposed to those changes in exchange rates.
Exactly, and as they move more into biosimilars, they'll face new challenges specific to that market. Developing those complex drugs is a long and expensive process, and there are always regulatory hurdles to clear. It's high risk, high reward.
So it's not all smooth sailing. But even with all that, there's a lot to be excited about when it comes to Shilpa Medicare. I mean, they've shown phenomenal growth, a clear strategy, and they're really good at managing their finances.
Absolutely. They seem to really understand the global pharmaceutical market and are making some bold moves to take advantage of those opportunities. Like their decision to expand into biosimilars, that's a great example. It's risky, but if it works out, it could be huge for them.
It's like they're not just following the trends, they're creating their own future. And they're
Yeah.
doing it through those strategic partnerships, investing in R&D, and just constantly improving their operations to stay ahead.
Yeah, you got it. It's that combination of vision, execution, and being able to adapt that makes them such an interesting company to follow.
So after this deep dive into Shilpa Medicare's Q2 performance, the big question is, can they keep this momentum going and become that global pharmaceutical powerhouse they're aiming for?
Well, if we had a crystal ball, that would be great. But predicting the future in any industry is tough, especially in the world of pharmaceuticals. It's always changing.
But based on what we've seen, that strong financial performance, their smart moves, and their willingness to embrace new things like biosimilars, it definitely seems like they're on the right path. They have a strong product pipeline, a good financial base, and a leadership team that seems really sharp and ambitious.
I agree. They've proven they can adapt to changes in the market, take advantage of opportunities, and overcome those challenges. That ability to bounce back is so important for any company that wants to succeed in the long term.
It's been quite a journey exploring Shilpa Medicare's performance this quarter. From those record profits to their big expansion plans, they've given us a lot to think about.
They have. But as we wrap up, I want to leave you with one last thought. Can Shilpa Medicare take their success in generics and APIs and really make a name for themselves in the world of biosimilars, which is, let's face it, more complex and competitive? I think that's the question we'll all be watching to see unfold.
That's a great point. Only time will tell how that part of their story plays out. But one thing is for sure. Shilpa Medicare is a company to keep your eye on. Thanks for joining us for this deep dive, everyone.